Good morning, good afternoon, good evening, and welcome to our 326 weekly webcast. If you have any questions, please type them. There's tons there. Keep typing them now, please. You can ask me business questions, career questions, investing questions, personal growth questions, investing questions, etc. And my humble goal, as always, is help take your portfolio, your career, your happiness, etc. To the next level. Before I take your questions, please note that I do offer comprehensive coaching services. 10 hours of one-on-one coaching, plus 300 hours per year of group Q&A over Zoom, and 500 hours of my online award-winning courses if you're interested in working with me to get a new job, a raise, a promotion, start a side hustle, or anything else. Please go to the description of this video and click on the link to set up a call with somebody on my team. Or you can go to my website, which is harounventures.com, and click the book a meeting button at the bottom there. That's harounventures.com. Thank you. All right, and I'm dressed a little bit differently today. I figured I'd make it a bit casual. I'm a massive Toronto Blue Jays fan. That's my team. We have the best record in the American League. Very, very humbly proud about that. And sports is always great boardroom talk, right? So you always got to bond before business. And quite often what I've done in my interviews is I've talked about sports, and it's helped a lot. So at the bottom of your resume, always put down interests and then write team-based sports like baseball, basketball, football, never individual sports like tennis or golf, so you come across as a team player. And you can always bond that way. So when you bond with somebody and you find out they love sports, you ask them where they're from, and then ask, do you follow this baseball team, this soccer or football team for Europeans, etc. I promise you this helps a lot. Always bond before business. All right, let me get to your questions. Ray, how are you? Ray wrote, you say there's no point in investing in companies with similar ROI to the S&P 500. However, high growth sectors for them, IT, CD, HC, Com. So is it wise to have 20% each of these? What do you do with the rest? Yeah, so what I recommend doing is if you don't have time to do investment research on companies, then there's nothing wrong with buying ETFs. But if you're going to buy, and never buy mutual funds because they're a scam. There are sometimes 5% hidden fees versus ETFs where the fees are quite often well under 0.5%. Now, if you're going to invest in ETFs, I recommend never having more than 20% of your portfolio exposure to one particular sector, like technology, healthcare, financials, retail, commodities, etc. Always be diversified, please. And if you live outside the United States, be careful of your US dollar exposure as well. Okay, I hope that answers your question. But generally speaking, what I like to do is I like to do investment research on companies that I believe are a 5x5. What does that mean? Well, that means I think they have a 500% return within 5 years. Am I wrong? Almost always. But when I do my research, if the stock is only up a couple 100%, I do quite well, humbly. Now, the best way to do investment research on any stock is to create a one-page report and a model as well. And so for my corporate clients and individual clients, and learn more how to access this, go to the link in the description of this video. I do 3 buckets of research. Number 1, qualitative research. Always start with the management team, okay, because that's what a company is. Then quantitative research, like the total addressable market size, etc. Never invest in a company in a tiny market. And lastly, most importantly, financial research. And I teach you how to forecast financial statements and value companies using many different valuation methodologies. Now, what you do is in this spreadsheet, there's 700 questions you're going to answer. And what comes out of it, and this is just dummy data, is a one-page report right here, which you can print out, put on your wall, or give it to people you're interviewing with. What also comes out of this is a massive 150-page detailed report, and of course, a dashboard as well. So you always have to do your own investment research. Don't rely on anybody, including me, to tell you what to do. And don't watch CNBC and don't listen to them because they'll walk you off a cliff. That much I promise you. What you can also do is forensic financial statement analysis using AI in this new course I just released as well, where you get a one-page executive summary as well as a detailed write-up. Nobody is smarter than you. Always do your own investment research. Thank you. Next question is, what is the strategy with the low-risk companies that have to populate a percent of your portfolio? Can you actually substitute them with ETFs that have 40% ETFs and 60% high-growth companies? Yeah, as long as you stick to that mandate of what I told you, which is no more than 20% exposed to individual sectors, okay? Now, if you're going to have individual stocks in your portfolio, I don't want any stock to be more than 5% of your portfolio, even if the stock has a cure for cancer. Like, you got to diversify. Always, always, always. And 20 is a good number. Don't go much above 20 because the diversification is not going to really move the needle in terms of volatility in your portfolio, okay? In terms of exposure, meaning risky stocks versus non-risky stocks for you or for anybody. So the rule of thumb is this is kind of old school. You take your age, you take 100 minus your age. So if you're 40 years old, 100 minus 40 is 60. And that means that 60% of your portfolio can be in high growth stocks, slightly riskier, and 40% in lower risk value stocks or AAA rated bonds. Okay, and if you're 95, 100 minus 95 is 5. That means 5% of your portfolio can be in riskier stocks and 95% in very safe stocks or high dividend yielding great stocks in the Dow 30. Okay, never buy a stock just because the yield is high. Do your research first. And the reason why only 5% of your portfolio when you're 95 can be in growth stocks is you don't have as much time to make that money back if you screw up. So when you're younger, and when I was 20, 100 minus 20 is 80. 80% of my portfolio was in growth stocks. Always do your research first, please. And if you have follow-up questions, please let me know as always, and thank you. All right, next question is, do you use the rule of 40? So the rule of 40, for those who are not familiar with it, it usually refers to software as a service companies, SaaS companies. And what that means is the revenue growth rate plus the profit margin should equal 40%. I don't use it personally only because it depends on whether the stock is growth versus value. Okay, if I'm investing in very early stage growth stocks with really, really high revenue growth, but negative profit margins, that statistic is irrelevant to me. But the way I invest is I like to look at small and mid-cap stocks. And what I like to do is I like to create a financial model and forecast what they're going to earn in 5 to 10 years, and then base my target price off of my PE target price forecast in 5 or 10 years. So a little bit less relevant for me. Yeah. But if you're going to an investment banking interview, there's nothing wrong with using that framework. Yeah. All right. Remember, I cut my teeth in the hedge fund industry. All right. Next question is, which 10 companies in the financial sector are worth exploring? So what I always do is this. Whenever you think of an investment theme, you look at the ETF for that investment theme, then you look at the components. So for example, with financial services, we can look at what's called the XLF. Okay, let's go here to Yahoo Finance. And then we're going to look at the holdings, okay? XLF. So ticker XLF, this is an ETF for financial services companies. You're going to go to holdings here and see what the top holdings are, and then do research on these companies. Okay, Berkshire is up here because it's 28% of it is Geico or insurance companies. But I would do work on pure plays like JP Morgan, Visa, Bank of America, etc. It's a safer way to do it rather than just buying small or mid-cap financial services companies. Yeah. Now, I remember years ago when I worked in the hedge fund industry at a very, very large firm you've all heard of. I used to short the SMH whenever I wanted beta exposure. And this is a semiconductor index. And my boss would always get mad at me. He's like, Chris, no, don't be lazy. Look at the holdings and do research and find shorts in this ETF here. All right. And if anybody wants more details on shorts, how shorts work, portfolio management, diversification, hedge funds, etc., just ask me, please. All right. Next question is, if you want your portfolio to be only ETFs, how would you distribute it between the S&P 500 tech, financials, and healthcare? Yeah. So regardless, I wouldn't have more than 20% exposure in any one particular sector. So I probably wouldn't buy a technology ETF if you're going to own the S&P 500, because I think about 30% of the S&P 500 ETF is in tech stocks anyway. Moving on to any thoughts on Workday, ticker WDAY. I participated in the IPO. I met with Anil Bousri back in the summer 2012 when I went public years ago. What I liked about the company at that point in time was that the founder, or one of the co-founders, Anil Bousri, was the CEO. He's no longer the CEO. I don't like investing in growth stocks where the CEO is no longer running the company. It's just the way I am. Also, when it comes to Workday, so Workday is an HR, human resources software-based company. And if you think about it, I think hiring is going to slow quite a bit because of AI. So if AI can do the job of 3 people and you can cut your workforce down by 66%, that's an exaggeration, why would you buy Workday? Of course, every stock is worth something, but if I think out longer term, it makes less sense for me to want to put that stock in my portfolio. I think it's down about 13% year to date, partially because people are worried about AI. Now, everybody wants AI exposure in their portfolio. And so a lot of people obviously own Nvidia as well as Palantir. I invested in Palantir pre-IPO when I worked in venture capital. It's a great company. Yes, it is overvalued. That's fair on this year's earnings, but everybody wants exposure. And so if you think about it, if you're a portfolio manager, you only have a limited amount of capital to invest in AI type stocks. So you're probably going to prefer buying Palantir, and less so Workday, right? So every investment class is relative. And then whenever I invest in companies, I always ask myself this one question. In 5 years, will this company be more relevant or less relevant? Well, if Workday is HR software and people are hiring fewer employees, then in 5 years, it might be less relevant. Of course, you have to do a full detailed analysis in that first, please. All right, next question is, which value companies are founder-led? Very, very few. And so when I invest in growth stocks, I like to only buy when the founder is still running the company. Because when the founder leaves, what happens is bureaucracy sets in, the CEO is short-term focused and a slave to the board. If they miss one quarter, they're out. Founders, when they run a company, the board loves them and they're long-term focused. Right? And that's why I'm less of a fan right now of Amazon as I was in the past, because Jeff Bezos is no longer really running the company. Andy Jassy is wonderful because he started AWS, but I'm just not a fan anymore of that company. So value stocks are usually old companies. So they've been around sometimes for 50, 100 years. As a result, the founder is usually not running the company. Yeah. And that methodology doesn't really apply, meaning investing only where the founder runs the company, if you're a value investor like Warren Buffett is, right? So Warren Buffett bought Coca-Cola back around 1990. He still owns it today. Of course, the founder of Coca-Cola is not running the company. Quick side note on Coca-Cola. If you bought it on the IPO day 1 year later, you'd be down 50%. But obviously, if you held it since IPO, you'd be worth a fortune. When Warren Buffett buys a stock, he always tells himself he's assuming the stock market's going to be closed for at least 10 years after he buys a stock. That's why he's the sage of Omaha. Yeah. And I will not be investing in Berkshire when he retires. Yeah. Okay. All right, next question is, how do you know if the price of gold is too high? Yeah, it is pretty high right now. It's up about 28 or 29% year to date. I think it's around $3,300. A lot of Wall Street analysts have a target price of, around $2,900 or so. So as Warren Buffett said, you want to be greedy when others are fearful, and fearful when others are greedy. So now is not the time for me personally to be adding to my GLD position. Yeah. All right. Do you invest in commodities aside from gold? What about silver? I don't, only because I do invest in industrial companies which use silver. And so there is a correlation there. So gold and silver are not that highly correlated. Yes, they're precious metals, but silver has more industrial exposure. And so when the global economy is in a recession or we're in a bear market, industrials companies, including silver, get murdered. I usually like to buy gold when there's blood in the streets and there's panic. Like back in April, that would have been a time where I would have bought gold. right? And in 2008, GLD, ticker GLD, was my largest position. The great thing about buying ticker GLD, the ETF for gold, which was launched in 2004, the great thing about that is you know it's real gold. If you buy gold from a seedy part of town, which some people do in the Bay Area here, you don't know if it's real. Okay, and this is plastic. This is fake, just like I'm a fake teacher. Yeah. Plus, what I like about ticker GLD is that it's liquid. You can get in and out pretty quickly. The fees are high, around 40 or 50 basis points, but I'm willing to take that risk knowing that it's real. Yeah. Yeah. Now, the market's at an all-time high right now. So I don't think there's much fear out there. I like to buy gold when there's fear, and I like to buy stocks when there's fear. I'm not really buying much these days. Yeah. All right. Be a contrarian and watch your net worth take off. Is there a maximum percent for your portfolio for small and mid-cap growth companies? Yeah. So for me, I'm 53 years old. I'm a 53-year-old man-child. And by the way, when GTA 6 comes out next May, if it ever comes out, I'm not doing these webcasts for at least a month, okay, guys? But I'm 53, so 100 minus 53 is 47. So 47% of my portfolio is in growth stocks, okay? And usually for me, growth stocks are small and mid-cap stocks, right? And I do go above that limit every now and then to be intellectually honest and transparent. Yeah. But you got to do the research first. I'll give you plenty of templates to do it. Don't listen to idiots on television, ever, please. They don't know what they're talking about. They're all biased. So when you see a fund manager interviewed on CNBC or Bloomberg or any of these other shows you shouldn't be watching, these fund managers are the best salespeople in the world. That's how they became fund managers, right? That's how they rose to the top. And so what they're doing on these television shows, and they do disclose it, is they're talking their book, meaning they're pitching their stocks. Don't listen to them. It's the same thing with investment banks. You know, if an analyst from an investment bank goes on television and tells you to buy Microsoft, you can't really trust them. Why? Because that same investment bank works with Microsoft a lot in M&A deals. Okay, so you can't trust them. Everybody is biased. And don't trust anybody that's short-term focused. There's no shortcuts, okay? Just be long-term focused. And if you listen to the media, okay, and I talk about this at length in my latest vlog on my YouTube channel on the movie Too Big to Fail. But if you listen to the media, you will lose your shirt. In 2008, Jim Cramer pounded the table and told everybody to buy Bear Stearns. Of course, it went belly up. Okay, just listen to yourself. Nobody's smarter than you. And always do your own research, please. I say that because I care. All right, next question. And everybody, please keep typing your questions. Thanks. All right. All right, next question is, I'm a European, and I hold an unhedged S&P 500 ETF with some capital gains. I think I know what you're getting at. You're probably getting at FX currency, right? If I sell now and switch to Euro hedge ETF, I'll owe 10% capital gains tax. Do I have other options? You do. You do. And it's smart to be hedged. If you're an investor in the United States, you don't have to worry about currency exposure as much. But if you're overseas, you have to worry about dollar exposure. So what I would probably do, I would talk to your accountant first before thinking of selling. And see if you can move that position, if it's not already there, into your retirement savings account so that you're not going to pay taxes. What you can also do is you can buy a put. And let me explain how this works. So let's say that I own a ton of Coca-Cola shares, ticker KO. And I don't want to sell it because I've owned it for a long, long time and I don't want to pay taxes. Okay. Now, if I sell it, I owe a lot in taxes. But I don't want to sell it. But I'm worried that between now and the end of the year, Coke might go down a lot. So what do I do to protect myself? Well, what you can do is you can buy puts, okay? And puts are kind of like a life insurance contract for stocks. So for me, I'm worth more dead than alive. It's funny but true. And so what I do is I have a life insurance policy. So I pay a small amount of money every month. If I die, this is worth a lot. If I don't die, this is worth nothing. That's how a put works. So on Coca-Cola, you would buy a put. If Coke goes down between now and year end, this goes up. If Coke goes up, and you'll be happy because you own a lot, this just goes down to zero. That's it. It's that simple. Now, the way to look at options and to know if a company has options is you do the following. Okay, so let's go together here to Yahoo Finance. And let me just type in ticker KO. Okay, so you'll see on the left side that there is options. Okay, and if you click it and you see data behind it, that means the company has options. Right, so what you would do, and options usually expire on Fridays. Okay, so let's go to year end. Okay, December 18th. Okay, and I'm going to go down to puts, sit down here. So I could buy one of these products here to protect myself in case the stock goes down a lot. Yeah, and that's sort of what Mark Cuban did with Yahoo. So Mark Cuban sold his company Broadcast.com in the late 90s to Yahoo, and then he used more complex option strategies to protect himself in case Yahoo crashed. People thought he was nuts at the time, but he saved himself over $1 billion. And I did a vlog on that as well. If you want to know where that vlog is, let me know. I'll give you the link. Thanks. All right. If I have 30% of my portfolio in the S&P 500, and I already have 11% in tech, can I allocate up to 9% additionally to tech stocks? So at the end, I have 20% exposure to tech, right? Yeah. So if 30% of your portfolio is in the S&P 500, 30% exposure there, that means about 11% exposure to the tech sector. Yeah, there's nothing wrong with that. You can buy 2 more stocks at 5% each to get you to 20%, meaning 2 tech stocks. Nothing wrong with that, yeah. And these are just rough guidelines, and I feel like I have a fiscal responsibility and a financial duty to my investors, my clients, my students to preserve capital. Warren Buffett used to always say there's 2 rules to investing. Number 1, don't lose money. The second rule is don't forget rule number 1. Yeah. Okay. If 60% of your portfolio is the low risk portion, okay, like AAA rated bonds and solid dividend yielding companies. What else apart from ETFs should it contain? Individual large caps led by their founders. That's what I like, at least the growth side of your portfolio. Value stocks usually are not founder led because they're really old. But that's my bias, is to only invest in tech stocks for the most part, growth tech stocks, where the founders still run the company. Yeah, yeah. So if Jensen Huang decided to leave Nvidia tomorrow, the stock would crash 50%. Yeah. That's what a company is, people. Yeah. All right. Adobe CEO, Shatan Narayan, they say is not the founder, but longtime visionary of Adobe. Any thoughts there? Yeah. So I think Adobe is down year to date. There's a lot of concern about Adobe because of Sora. Okay, and ChatGPT and DALL-E and all that stuff, right? And so I pay a lot of money to Adobe for B-roll video in my YouTube videos. What I've started doing is not using Adobe, I'm using Sora to generate those videos, okay? And so AI is going to really hurt Hollywood, which means it's going to hurt Adobe as well. A lot of people use Premiere Pro for video editing, which is an Adobe product. A lot of people use Photoshop as well to manipulate photos, but if you can do that in the long run using AI, then Adobe might be in a bit of trouble. Yeah. Okay. Hey, Ben. Good to see you. Just curious, is your net worth closer to 10 million, 20 million, 30? Would you? Yeah, I'm not. Yeah, I don't share my net worth, but I humbly don't have to work, but thank you. And I'm not motivated by money. I'm just motivated by helping people. When I used to work at big firms, like Goldman, Citadel, Accenture, etc. What would always happen is really uncomfortable for my boss at the end of the year. My bosses would usually say, humbly, they would usually say, Chris, you're the top performer or a top performer. You're making us a lot of money. People love working with you. You're a good teammate, but can you stop helping people in other departments? And I would always say, no, it's just who I am. It makes me happy. And when I worked at Accenture, I got this award back in 1998. I worked for Accenture back in the 90s. Good company. Yeah. Don't let money be your God. Okay. You'll never be happy. Yeah. And there's a lot of people, it's interesting. A lot of billionaires are depressed. They're depressed because, they always compare themselves with other people on the Forbes billionaire list. And when I worked at Goldman Sachs, I remember every Christmas bonus season, everybody was depressed because there was always one dude that got paid a hell of a lot more than us. And, you know, the only reason you should ever look into your neighbor's bowl is to see if they have as much as you, you know, not to see if they have way more or whatever. Yeah. I'm not a socialist. I'm a capitalist. I often vote Republican. I did not vote in this past election for any candidate. But anyway, yeah. All right. And it's so interesting because I want you guys to read the book called The Art of Happiness by the Dalai Lama. It's really good. And in that book, he says something fascinating. He said that the problem with Western society is we sacrifice our health, our entire lives in order to make money. And at the end of our lives, we sacrifice all our money to maintain our health. And we look back and we realize we never really lived to begin with. Yeah. And if I can help any of you find your passion, please let me know. It's why I do what I do. Like, I think of myself as your waiter, okay? Humbly your waiter. And this is where I proposed to my wife in Paris 25 years ago. It goes by fast, man. So when you go to a restaurant, you look at the menu, eh? But you only choose one or two items. That's my job. I'm here to serve you, okay? I'm your waiter. I'm exposing you to tons of different types of careers. And I want you to pick the career you're most passionate about. Yeah. It's not about Americans, it's about. Yeah. All right, let me move on now to the next question. If you have 20 stocks in your portfolio, each at 5%, and one of them reaches a 5x5, then the average ROI for the rest of the stocks needs to be at least 12%. Otherwise, you're better off buying and holding the ETF. Do your research. I'm telling you, like the best hedge funds on the planet, you know, these hedge fund portfolio managers that get bonuses of 20 million or more per year, it usually comes down to a handful of stocks, okay? And those stocks are the ones they've done a ton of research on, and the rest of it is just noise. And what's fascinating is your best idea usually is not your best performing one. And the reason is it's not your best idea because there's a little bit of information missing that makes you feel uncomfortable with it. It's usually your second, third, and fourth best idea in a given year. And be long-term focused, okay? Day trading doesn't work. Be long-term focused. Try to ask yourself, is this company be more relevant or less relevant in 5 years? And do the work using my templates or anybody's templates, please. Nobody is smarter than you. And I believe that in my whole heart. Nobody is smarter than you. That I licensed that Steve Jobs video that I show you guys every single week. Okay. All right, give me 1 second here. And I'm trying a slightly new microphone with different volume levels. If there's issues, comment. If not, no need to comment. Thank you. Okay. Do companies like Google, Meta, Alphabet, Amazon qualify for inclusion in the non-risky parts of the portfolio after full evaluation? Do you consider them pure plays? Yeah. Yeah, Google. So I think what's going to happen is Google, as well as Meta, are going to get broken up into different companies within the next 10 to 15 years. It hasn't happened yet for strategic reasons, but if you think about it, you know, Google owns the two biggest search engines in the world, Google and YouTube, right? And so I tend to look at the breakup value of those companies longer term. Same thing with Meta. There's a reason why the company was renamed to Meta, because the Department of Justice is going to break them up at some point. Okay, they'll break it up into, I don't know, Facebook, Instagram, WhatsApp, and miscellaneous stuff. Yeah, so I tend to look at the breakup value of those companies longer term. Same thing with Amazon. You know, their consumer division, AWS, all that stuff. You got to value them differently, I think, if you're going to be long-term focused on those companies. Yeah. But I'd say that they're getting a little bit more towards a value territory. You know, my favorite of those is definitely Meta, obviously because the founder is still running the company, Zuckerberg. Yeah. Never invest in a tech company when the founder leaves. Right. It doesn't always apply, but in most cases it does. Yeah. And you can backtest that. It certainly works. All right. Next up, Ray wrote, CRM, Salesforce, reached a 52-week low. What is your comment? Do you consider it founder-led growth company? Not growth anymore. A little bit more value. Let me explain. So Mark Benioff is a brilliant man. He runs Salesforce.com, which is the largest employer here in San Francisco. He started Salesforce back in 1999. He came out of Oracle. He was the youngest vice president there in history. And a lot of the best software startups come from people that used to work at Oracle because they can sell. And that's what a CEO is, a great salesperson. And so it went public in 2004. It's been a wonderful growth stock for many years, but Salesforce is down quite a bit this year. It's underperforming massively because it's not growing as much as it used to be. Let me explain what that means. This is really important. There are two camps of investors, okay? You're either a growth investor and you buy stocks that are growing fast, but they're expensive. Or you're a value investor like Warren Buffett. You buy stocks that aren't growing that fast or as fast, but they're cheap, right? Or they throw off a lot of cash, or they have a decent dividend yield. Growth stocks, after a while, after a couple decades or so, growth stocks, and Salesforce is 26 years old. Growth stocks, eventually, the growth slows, and then they transition to value, okay? It's not their fault. They're just big. It's like the U.S. economy will never grow more than 3%. It's just big. And so if a stock is not growing fast enough, like Salesforce, growth has slowed, then growth investors are like, screw you, man, I don't want to own you. But value investors are like, well, I do maybe one day, but not yet. It's not cheap enough yet. So here's the problem. It's stuck in the middle between growth and value. And I never like to buy stocks that are stuck between growth and value, because I refer to those as stuck in investment purgatory, right? Like, it takes a while to go from growth to value. You're in the middle. And what can expedite the process materially is if an activist investor like Carl Icahn gets involved, okay, and he breaks up the company or forces it to become a value company faster. Let me give you a great example. So if we go back to, 10 years ago or so, it was eBay. So eBay was really underperforming the markets. And the reason eBay sucked as an investment was because eBay had two components to it. The core auction marketplace, which value investors loved, the marketplace, and then you had PayPal, which growth investors loved. So growth investors were like, hey, eBay, I want to own you because I love PayPal, but not your sleepy auction business. And value investors were like, dude, eBay, I want to own your core marketplace auction business because it throws off a lot of cash, but I don't want to own PayPal because that's growth. In came Carl Icahn. And what he did was he bought about 30% of the company, put himself on the board, pushed out the CEO, John Donahoe, great guy. I've met him a number of times, big, tall guy. He used to work at Bain. Then he went to become the CEO of Nike, and then he got pushed, and he got a $100 million bonus for leaving. So Carl Icahn came in, joined the board, and he forced the company to split into two pieces, okay? One was a value component called eBay, meaning the core sleepy auction business, which threw off a lot of cash. And the other component was the higher growth PayPal. Growth investors love PayPal. Value investors love core eBay. These two are worth more than eBay on its own. So the bottom line is, try to never buy a stock that's stuck between growth and value, because it can take a decade sometimes for it to get into the value camp. Yeah. It's kind of like Japanese stocks. They were all growth stocks up until about 1990, and then they were stuck between growth and value in the 90s, and now they're more value-ish. Yeah. You're either a growth investor or a value investor. Yeah, very few in between. All right. Next question is, if you believe that in the future, robotics, energy storage, blockchain technology, and multi-sequencing will be leading themes, how would you invest, through ETFs or individual companies? Yeah, step one, I would go to etfdb.com. It's a free source. I'll show you. Okay. So we go here to etfdb.com. That's etfdatabase.com. Okay. And then what you're going to do is you're going to screen, okay, you're going to screen ETFs. You're going to look for AI ETFs or whatever other ETFs, and there's 5,000 here you can screen and look for, okay, like blockchain ETFs or whatever it is. Okay, then what you're going to do is you're going to look at the holdings, okay, and then once you figure out what the holdings are, then do research on those holdings if you want to. So for example, iShares Bitcoin Trusts, let's actually go to another one. if you found a diversified cryptocurrency fund, which wasn't just Bitcoin, it was a bunch of other stuff, then what you could do is you could actually go and do research on those companies, okay, whatever theme you're looking at. Okay, so top down is the ETF, bottoms up is the individual stocks within that ETF. Do research on them and fill out that 100-step research dashboard that I showed you at the beginning of today's webcast. Thanks. Okay. And never value companies off of this year's earnings. Create your own financial model like I do, and value companies off of 5 or 10-year earnings estimates. That's how the best hedge funds do it. Yeah. They're not day traders. They are long-term focused. Yeah. Okay, next question is, any thoughts on CRISPR Therapeutics and Archer Aviation? I don't, but you can use my templates to do your own research. Yeah. All right. Next question is, in the Sequoia cap generative AI market, there are only, let me show everybody that first before I take your question. So Sequoia, which is the best venture capital firm in history, the top 10 VC firms on the planet only have 1% of their investments in unicorn companies, meaning companies with $1 billion plus market cap. Sequoia has 5%. They're unbelievable. Okay, and I partnered with them before. They led the A round on a company I invested in, and I led the B round. So I joined the board. I spent a lot of time at their offices. They're unbelievable. And I'm going to tell you some of their tips and tricks in a second and what makes them successful. But first, what I want to do is I want to show you what Sequoia says are the best investments to look at when it comes to AI. Okay, my dad told me years ago, only take advice from successful people. So nobody take advice from me, please. So what we're going to do is we're going to go together, and I'm going to paste this in the chat for you guys as well. Okay, so let me copy this. Actually, I can't paste in the chat. Just go to Sequoia, do a search for Sequoia Cap Generative AI. And they update this every now and then. But if you want to see what AI companies you should invest in or do research on, you're going to go to this link right here. Okay, now, not all these are pure plays, right? But if you want to look at consumer investments or companies that you can use from an AI perspective, you can look at these here, okay? If you want to look at enterprise companies, private companies, some of these are public, some of these are not pure plays, you can look here. So for example, Glean is a company that is kind of like Google, but it's for AI searches within your intranet, meaning behind your firewall in your company. You can look at all these. And if you want to learn how to work smarter, not harder, you can also check out some of these apps here, these companies, their websites, and start using their products as well. Now, if you're really technical, you can look at the generative AI infrastructure stack right here to see what tools you should consider using to take your game to the next level by leveraging AI. Quick side note, I don't want anybody on this call to study computer science in school. AI is going to destroy that market. It already is. I'm seeing here in the Bay Area every other day, thousands of people seem to be let go because AI is taking their jobs, especially entry-level developers. Okay, it's rough. And Jensen Huang, the CEO founder of Nvidia, he said that as well. Don't study computer science anymore because AI is going to do that for you. Yeah. Now, the two sectors I don't think AI is going to materially disrupt in the near term is anything that deals with sales, like direct sales, because people trust people and not AI. And I also think, actually, a couple sectors, wealth management. So in the next couple decades, it's sad, as the baby boomers move on, there's going to be the biggest generational transfer of wealth in history. I think that AI is not going to cannibalize that market entirely because, again, we do not trust AI. I'm finding also that a lot of private equity money is going into companies that will not be impacted by AI. Like my buddy just sold his plumbing company here where I live for about 40 million bucks. Like private equity firms are snatching up anything non-AI right now. Yeah. So hair salons as well won't be disrupted by AI, etc. Yeah. All right. All right. Is there a threshold of ownership for the founder CEO in a company so that we consider him with strong influence, for example, 10% or 3%? Yeah. I would say to have skin in the game over 10%. Over 10%. And usually what happens is founders own 100% of the company. Then they get venture capital firms to invest, and they go from 100% before IPO, Goes from 100% down to 50, 40, 30, and sometimes 20, sometimes less than 20% when they go public. But what they can do, though, is they can maintain their control of the company. So Mark Zuckerberg, and I do a case study of this for my clients, but Mark Zuckerberg, when Facebook went public back in 2012, on the cover of the S-1 filing, this is the IPO document, on the cover of the investment offering memorandum, it stated that, yes, Zuckerberg will own a lot less, but he'll always maintain voting control. Yeah. Same thing, I think, to a lesser extent with Larry and Sergey at Google. Yeah. All right. All right, give me 1 second, guys. I got a notification that there's limited liquidity for a couple of stocks, but I'm confused as daily volume is not that small. Can you explain? Yeah. So never invest in a stock that is illiquid, because illiquid stocks own you in a down market, not vice versa. What liquidity means is, can you get in and out quickly? Okay, so what you want to do is you want to look, and I'll just pick a random stock here. I'll show you my metric I use, which humbly works. So let's go together to finance.yahoo.com and let's type in some random ticker. Okay, let's go here to this. Yeah. So you never want to own more than 10% of the average daily volume. Say so for this stock here, it doesn't matter what it is, it trades 284,000 shares per day. So I never want you to own more than 28,000 shares of this. Okay. And the reason is because, again, illiquid stocks own you in a down market instead of vice versa. In the fall of 2008, when we were within 24 hours of bank machines not working, a lot of hedge funds had to force sell a lot of stuff that was illiquid. And by selling, they drove the price down. Yeah. Okay. What percent of bonds should one have in their portfolio, and what is the reasoning behind it? Yeah, that's kind of like asking, I say this with love in my heart, what percent of your portfolio should be in stocks? I don't look at it that way. I look at risky versus less risky, or growth versus value. Yeah, and as I mentioned earlier, you take 100 minus your age, and that's a percent of your portfolio that can be in riskier stuff. Yeah. But you can always look at the rating agencies like S&P, Moody's, Fitch, etc., to see if bonds are at least AAA or A rated or above. Anything below an A rating is considered junk, or high yielding is the politically correct term these days, and just be careful with that. Yeah. Yeah. And be careful also with municipal bonds. Like if you buy US government debt, like federal debt, you're going to be fine, I think. You definitely will be, right? But if you buy municipal bonds, you can lose every penny. A lot of people don't realize that. So why do people buy municipal bonds, or munis as they call it? Part of the reason is because there's less taxes, but you can lose all your money. And so there's a rich area of California called the Orange County. Remember that TV show? It was great. So Orange County declared bankruptcy 10 or 15 years ago, whatever it was. And a lot of people that invested in munis lost their shirts. Yeah, so be careful. Do your research first. Yeah. Yeah. What percent in AI specifically, not tech, but AI, is reasonable to have in a portfolio according to you? Yeah, so if 20% exposure is to tech, I'd say maybe it has to be less than half of that. I'd say less than 10% of your portfolio. Yeah. Yeah. But do your research first. Yeah, and people are starved for AI investments. They're starved for them. That's why, and there's a dearth of them. There's a limit. That's why companies like Palantir and Nvidia are at extremely high valuations right now. Ray wrote, if one holds 30 stocks and 20 ETFs, is that too much? I think it is, yeah. Now, when it comes to risky stocks, so a great friend of mine who heads up investment research at Franklin Templeton, Evan McCulloch, he was the biotech portfolio manager there for years. And I remember asking him once, I was like, dude, how do you invest in biotechs? I mean, they're like binary events. If they get FDA approval, the stock goes up a gazillion %. If they don't, it gets cut in half, kind of like ticker BIIB did back in 2005. And he told me he uses a spray and pray approach sometimes. What does that mean? Well, he'll take 5% of his portfolio and just buy a handful of small cap biotechs. And if one takes off, great, it pays for the rest of them, but a lot of them go to zero. Yeah. And the question is here, are you saying you would never buy companies like Apple, Costco, P&G, Pfizer, Merck because they're not founder-led? Even if you see their stock is broken and it will soon recuperate. It's just my investment philosophy. Yeah, if you're value focused, you want safe investments, you can look at those if you want to. I mean, Apple and Costco, you know, Buffett has loved for years, but it's just not for me. You know, but to each their own. It's like religion. It really gets contentious when you have growth and value investors arguing with each other. So it's just not for me. I'm not saying they're great companies, but I don't know, 15% return per year is not exciting to me. I like to go for 5x5s. Yeah. And I'm more often wrong than right, but when I'm right, I do okay. Yeah. All right, Peter, good to see you. You wrote here, what do you think of the precedent Trump has set when he fired Eric? Yeah, the head of the BLS, Bureau of Labor Statistics. Yeah. I don't think it was fair. I mean, she's just doing her job, you know, reporting numbers that were accurate, and the numbers weren't good, so she got let go. It's not fair. Not fair at all. That being said, one data point does make a trend. If we see it happen again, then we can concern that, or maybe decide that this is a material issue. Yeah. But I wasn't happy with that. Okay. Next up, do you see Trump continuing to do this, or has the reaction and response been enough to discourage him from doing it again? I think the response has been pretty extreme. Pretty extreme, right? So a lot of people are upset about that. You know, people that are right-wing, left-wing, it doesn't matter. And so the media should hopefully keep that type of policy move in check. Yeah. All right. Bill, great to see you, brother. Bill's one of my clients. He wrote, go Cubs. Dude, you guys won, was it 4-1 last night? You beat us at the Rogers Center. Yeah, it was a good game. Your closer rocked last night, too. Yeah. See, I told you sports is boardroom talk. Yeah. All right, next up, Sean wrote, is it possible to call investor relations 1 month to next earnings release and ask them about revenue and earnings expectations? Yeah. So the way it works is every company that's publicly traded has an investor relations department. Sometimes they outsource it to smaller to IR firms like the Blue Shirt Group, etc. But they usually have an investor relations department. An investor relations job is to tell retail and institutional investors what to expect and how to analyze the company. Now, they will never tell you anything that hasn't been publicly disclosed on a publicly available webcast, okay, or in a press release. So if you ask them a question about guidance, like what should we think about in terms of next quarter for revenue and earnings expectations, they'll usually give you a canned response like this. Well, as we said in our previous earnings call, expect revenue to be between this and this, and EPS per share, earnings per share to be between this and this. Now, at the end of each quarter, there's something called a quiet period. Okay, and this was kind of created by Elliot Spitzer, a disgraced former governor of New York City, who's based on Chuck Rhodes. Or Chuck Rhodes based on him, back in 2002 when he created Regulation FD, which means fair disclosure. So the last 2 weeks of a quarter, companies usually aren't allowed to talk to Wall Street. And the reason is because you can't regulate body language, right? So let's say that I'm the CEO of a company, right? And today's the last day of my quarter, and I'm going to miss earnings big time, and I'm stressed out. If I talk to you, you could see it on my face that I'm really stressed out. So that's one of the reasons why they have quiet periods, especially for software companies where sometimes 50% of the bookings for a current quarter comes in the last couple of days. You know, it's the same thing with a car. Like, I never buy cars at the beginning of the month. I wait until December 31st in the afternoon because I know that there's quota-carrying sales reps that need to close a deal. Yeah. All right. And never, guys, whenever you value companies, like I don't want you to look at a company and say, oh my God, it trades at 20 times earnings. Because that's 20 times earnings, forward earnings based on Wall Street estimates. And the reason that's dangerous is because Wall Street analysts, meaning sell-side investment banks like Goldman Sachs, Morgan Stanley, JP Morgan, etc., they almost always create their forecasts and tell the world about their forecasts based on the guidance management gave them. So if a company says to the street, expect next quarter revenue to be between $1 billion and $1.1 billion, and earnings per share to be between $1 and $1.10, these analysts are going to forecast within that revenue and EPS range. If they don't, then management of that underlying company is going to get mad at them. And if they get mad at them, that could lead to less investment banking work, even though there's supposed to be an ethical wall at big investment banks. Right? So there's that moral hazard or inherent risk of them getting less business. Always do your own research. Always value companies your own way. So if you've done a really in-depth analysis on a company and you notice that the company always reports earnings 1 penny above the high end of the range, then I want you to forecast that every single quarter if you can, and value the company off your earnings estimates in 5 or 10 years, as I mentioned before. Yeah. All right. Okay, next question is from Anything, who wrote, hey, Chris, how are you doing? I'm always great, thanks. Hope you're doing well. Feels good to dress down. All right, I want to get a little bit of audience participation here. Tell me, should I wear formal or less formal? So either type Chris button-down shirt or Chris t-shirt. Button-down or t-shirt. Whatever you guys write is how I'm going to dress going forward. Okay. Yeah. And bonus points if somebody who can tell me what album this is. So I think it's one of my favorite albums of all time. Yeah. All right. So Anything wrote, question. There's a lot of jobs I'm interested in, but it's really difficult to narrow it down to one. What's your advice when it comes to such scenarios? Yeah. So you gotta, when you find your passion, you'll know you're not going to work. You're going to do what you love doing. And the way you know you love doing what you're doing is if you wake up way before your alarm is going off, and instead of saying, oh, thank God I can sleep an extra half hour, you say, oh, thank God I can get up now and do what I love doing. So how can you find your passion? Well, what I did when I was in my 20s was I set up informational meetings with tons of people that worked in different industries. And when I was in my low 20s, at first I wanted to be a lawyer, right? Thank God I'm not. I hate lawyers. Unless you're a civil rights lawyer, then I love you. And so I set up tons of informational meetings. And I sat down with lawyers. I went down to Harvard Law School to sit in on stuff there like I'd ever get in. But I sat down with lawyers. And it was depressing. And I came to the conclusion after these informational meetings with lawyers that earmuff time. Are you an asshole before you go to law school, or is that something they teach you in law school? I don't want to be around those people. I did the same thing at hospitals. I just didn't like, I don't know. I didn't like the sight of blood, so I didn't want to do that. Then I did informational meetings sitting in on trading floors, and I loved it. So set up tons of informational meetings, please. If you want, go to the description of this video or go to my website, harounventures.com, book a call at the bottom, and we'll help you find your passion. Yeah, okay. All right, and I'm going to kick somebody out who is spamming. Block. Okay, great. All right, so far, I asked, should I be wearing this or button down? Okay. All right, so t-shirt, 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 Business Smart from Bill, t-shirt, t-shirt. Oh my goodness. Wow, okay. Give me more votes. It sounds like I have to wear a t-shirt from now on, but I want more votes, please. Yeah, thank you for this. Yeah. All right. Okay, let me move on here. All right, next up, what jobs, and by the way, if you guys want to work with me, I'm happy to work with you as well. I will make your LinkedIn profile. I will get you that job. I will walk through walls to help you. I love doing it. This is my passion, my purpose. Just go to my website here and set up a call with us. I'll show you right here, okay? And I've got a pretty big team now as well. Help me out. So you go to harounventures.com. At the bottom, you can't see it. It's underneath that black propaganda thing at the bottom. There's a blue button that says book a meeting. Book a meeting there and set up a call with us, please. Yeah. All right. Okay. Okay, what jobs in tech do you think will become the most popular in the near future? I'll tell you what sector I think is protected within technology. I think it's quota-carrying sales reps, right? Not indirect sales, but direct sales. If you're a salesperson at a software company, tech company, or any company, you're safe, right? And the biggest danger to your career can be this. You work in sales, and then they want to promote you to management. So you manage salespeople, but you don't have clients anymore. Don't do that, because you will get fired at some point when we're in a recession. You always have to have clients, okay? And for those of you in your own companies, every second that you spend not focused on growing revenue is a waste of time. So I think if you work in the tech sector and you work in sales, you're safe. So if there are engineers out there that are worried about their jobs, right, what I recommend doing is try to move into sales or pre-sales initially, okay? Or be the engineering rep for a salesperson, network with them to become a salesperson. Because it's only a matter of time until most programming or developer jobs are gone because of AI. Yeah. All right. All right, next up, YST wrote, if you were starting your education in finance all over today with all the tech we have, what would be the hard skill you'd focus on? And you wrote, I know Python and Excel were great before. Excel is still great. Excel is crucial, yeah. Because a lot of investment banks, hedge funds, etc., still model only in Microsoft Excel. Yes, you can use Google Sheets for some of the, I don't know, the simplistic stuff, but the more advanced stuff, I would say Excel hell is something you got to learn, yeah. And then my son who works in investment banking, or he just got an investment banking job from a tier 1 firm, he's really focused on learning Excel to the extent that he's not allowed to use a mouse, right? You use quick keys, yeah. And he's also learning PowerPoint. I know it sounds silly, but you have to create a lot of slides when you work in investment banking. All right, next question is, time management is something I struggle with. How do you personally manage your time effectively? Yeah. So all my clients, if you join my program, I give you this. Okay, and this will change your life. I know it's tough to see right here, but it's a daily scheduling system. Okay, if you want to get something done, give it to a busy person. And so what I do is I have you document this every single day. Every night you write your schedule for tomorrow. Then tomorrow night, when you schedule it next day, you're going to score yourself out of 100. You take 10% off for everything you violated, including the following. You missed a meeting, 10% off. So now you're at 90%, right? You didn't go to the gym, 10% off. You're at 80%. For me, if I didn't pray, which never happens, take off 50%, right? It's very subjective. And at the very top here, I have you write down your goals with a deadline date in brackets. And the reason I do that is I met Tony Robbins years ago. I introduced him to one of my portfolio companies when I worked in venture capital, and he convinced me to quit, retire from Wall Street, and start teaching. But he said the reason that 95% of people give up their New Year's resolutions by the 3rd week of January is because they don't set a deadline date. You have to set a deadline date for your goals, and you have to vocalize your goals to your buddies that you trust as well. So that every time you see them, they're like, how's that goal coming along? And then once you achieve that goal, it's depressing if you don't set a new goal. We always push the goalpost out. And Elon Musk, who's brilliant, crazy, but brilliant, he once said, if you set a deadline date of 3 years, you'll get it done in 3 years. But if you set a deadline date of 3 weeks, you'll get it done in 3 weeks. So have a daily schedule. It works, I promise you. And take at least 1 day off a week as well. Otherwise, you'll go cray-cray. That much I promise you. Yeah. And that's why our forefathers, since the beginning of frickin' time, there's 10 rules that many of us live by. One of them is to take 1 day off. Okay, it's the 10 Commandments, right? Like God didn't have to rest on the 7th day. But he was telling us, dude, you got to rest. And so with me, I'm Catholic. I take Sundays off. For a lot of my Hasidic clients, they'll take Saturday off. Some of my clients that follow Islam will take Friday off. Whatever it is, just take 1 day off a week, or you'll go cray-cray. I promise you. Yeah. Okay. procrastination is something many individuals face. How have you dealt with such a scenario? Yeah, there's a great book I want you to read that I never finished called How to Stop Procrastinating. Okay, next question is, I'm just kidding. That was an awful joke. I'm so sorry. That was terrible. Terrible. Yeah, that's how Charles Barkley says it. So to stop procrastinating, all you got to do is create that one-day schedule I showed you before. The reason I'm holding it like this is because I spilled coffee right here. Yeah. That's how you stop procrastinating. Yeah. And another way to stop procrastinating is this, okay? And I get about between 10 and 20,000 steps a day in my office. So what I do is I've got this treadmill. You can buy them for like 100, 150 bucks now. And I get tons of steps. I don't do it on this weekly call, but I do it most of the time in this office. I don't have a chair here either. And if you're walking while you're working, okay, you can still type because your hands are on the desk here. Well, that's kind of fast, so we slow it down a bit. But by doing this, what you're doing is you're tricking your brain into thinking you just woke up. Now, we all know that the first hour of each day you're the most productive. If you cram for 10 hours at night for an exam, it's not as good as the 1 hour in the morning. But if you walk all day like I do, you're 10 times more productive every frickin' second. And you're killing two birds with one stone. Your body's a temple, treat it well. Yeah. All right. Table down. All right, next up, Pulasti, how are you? It's been a while. Wrote, have you seen the movie Dumb Money? I love it. It's about GameStop ticker GME. Yeah, I love that movie. It's fantastic. It's that with that dude from I Drink Your Milkshake. Remember that movie? What was that movie called again? With Daniel Day-Lewis? Somebody tell me, please. Yeah, I love that movie. It's about GameStop. Now, GameStop ticker GME went up 39.4 times in the month of, I think it was January 2021. Yeah, and there's a lot of manipulation going on there with the stock as well. Please be careful. I love the Reddit crowd. I love people that comment online, but I care about you guys. The SEC has not gone after retail investors. They usually go after institutional investors, right? But I think at some point they might go after retail investors. So be careful because I think they're going to let this one slide. But in the future, like stock manipulation is against the law, right? So if a lot of people get together and, you know, they spread rumors, or maybe not rumors, maybe they get together and they all buy a stock to push it up, that's against the law. So just be really, really careful. But of course, what drove GameStop up a lot was, you know, hedge funds were forced to cover, hit stop losses. And, you know, companies like Melvin Capital, which is a multi-billion-dollar hedge fund, went belly up. And according to people familiar with the matter, even Michael Jordan lost $500 on it, half $1 billion. Yeah. Yeah. But it's a great movie, Dumb Money. I recommend everybody watch it. That should be the title of this weekly webcast, Dumb Money. Yeah. They say those who can't do, teach. And those who can't teach gym class. And as you guys can see, I suck at sports. I'm trying to build up my muscle a bit. I'm just kidding. Except the part about those who can't teach gym class. You know that's true. Yeah. All right. Next question is, if I want to start a business, what are the most crucial aspects I need to look into? Yeah. So you always got to write a business plan because failing to plan is plan to fail. And I've got a template for that. I've got a template for everything, guys. Okay. So as part of my program, and then you can go to the link in the description of this video, set up a call with us. What I do is I have a venture capital boot camp. Okay. And I have you create a business plan by answering tons of questions. Okay. Including financials, which is the most important part. I help you with your exporting your final business plan, creating your presentation slides, etc. Okay. Failing to plan, again, is plan to fail. It's the most important decision you ever might make in your life, starting a business. And if you don't do it the right way, you lose your wealth, your health, your relationships, game over. And the way you know you have a great business plan, if you want to quit your full-time job, the way you know you have a great business plan is if you finish the business plan. Most of the business plans I write, I've never finished, which means I never started those companies. I ask you 700 or 800 questions first, okay? And you don't spend a penny on your company till you complete it. Now, let's say you're running a side hustle and you're working for a jerk. Okay, you currently work at a company working for a schmuck that pays you this much money to make their dreams become a reality. The way to know when to quit is this. You start a side hustle. And if the past 6 months, your revenue is greater than your annual salary, that's when you quit. Not if the past 1 month is great, because it could be seasonally strong like December, which is usually quite strong. Okay? That's when you know how to quit. And I'm here to help you do it. And for those that are getting bullied by assholes at work, I'm motivated to help you. I've been there. I've been bullied by people at work. You know, I've been punished for being too smart or working too hard. You know, a lot of you work for your boss, and your boss sees you as they think they hired their assassin because they're insecure. And if you're frustrated at work, and I say this with love in my heart, guys, good. Good, because that's going to force you to get outside your comfort zone and get a better job, or better yet, start your own company. And that's what I'm here for, is to help you with that. Otherwise, what's going to happen is this. You're going to go to your boss's house for, a party in the summer, which I usually refer to as forced family fun. And your boss is going to say, come here, I want to show you something. You see this Mercedes here? You see it? Yeah, you see it? Good. Well, if you work really, 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 really hard in the next 6 to 12 months, I'm going to buy myself another one. I can't tell if people are laughing or not. But if you're laughing, laugh at me, not with me, please. All right. And I just tried this new thing where I put hydrogen tablets into my water. Oh my God, I feel like it's like a legal drug. Hydrogen tablets. It's unbelievable. Could be placebo. I'm just the second day I've been doing it, but I feel great, man. Yeah. That's vodka and cranberry juice. I don't drink anymore, but I don't drink any less. All right, let's move on to the next question. But generally speaking, when you want to start a company, you always want to take a look at the total addressable market. Don't ever start a company in a tiny market. In fact, when I partner with Kleiner Perkins, great venture capital firm in the past, they've said they don't invest in companies where the size of the total addressable market isn't at least $20 billion. Why? Because in the highly unlikely event that a company gets 5% share of a $20 billion market, that means $1 billion in annual revenues. Yeah. But you guys got to focus on financial statements too, like to forecast financial statements before you start a company. Right? If you don't know how to do it, just think of money in, money out every month and forecast that. Don't just don't just look at the qualitative stuff. Look at profit margins, etc. Cash is king. Happy to go into more detail on that if you want me to. Thanks. And the stuff that I teach you guys in the Venture Capital Bootcamp, my program, is when I used to guest lecture a lot at Stanford Graduate School of Business MBA program. There's a great professor there named Ilya Strevulov, and I was part of the curriculum there, mentoring tons and tons of students on their startups. I mentored them. And I'll mentor you guys as well. Yeah. And if you're on a tight budget and you can't buy my stuff, just watch my videos on my YouTube channel for free, because I teach a lot on there as well. Yeah. Especially with reaction videos. Now, the next reaction video that I'm working on right now is the movie Wall Street Part 2. Okay, and I want to get this out in the next 2 weeks or so. I'm going to teach a lot of finance lessons for this. Then I'm also going to be doing reaction videos on Silicon Valley, Suits as well, because there's a lot of finance stuff in here. And I had it covered up like this before, and somebody said, why do you have Sluts? Why do you have a Sluts DVD? It's Suits. Sorry. And then also, this might be my favorite TV show ever, Succession. So I'm going to be doing this one as well. I've done The Big Short, tons of other ones. If you want to learn business the fun way, just watch those reaction videos on YouTube, please. Yeah. And that's how I teach as well. It's the exact same thing in the courses on my website. Yeah. All right. Next question is it more safer to invest in gold futures than the gold ETF? I don't recommend futures, okay, because there is a possibility you can lose your money. Just the ETF. Just buy and hold. Buy and hold. Yeah. And for those of you not familiar with futures, it's a way of betting on what the price is going to be in the future. So the global derivatives market is 6 times bigger than the global stock market. It's massive. And what are derivatives? Well, remember, calculus class, derivative means the rate of change. So derivative includes options, swaps, forwards, futures, etc. Okay, and if you want to learn about options and stuff, I teach that in my curriculum as well. Just be careful with that. I don't recommend it, guys. Yeah, because a lot of people, when they look at options, are very short-term focused. And never sell or underwrite options, because you can be randomly assigned, which means you're on the hook for more money than what you invested. It can be deadly. Yeah. All right. Alexandra has my favorite question of the year. What are your views on the inverse ETF of Jim Cramer? Yeah. You know, a broken clock is right twice a day. So sometimes his picks work. Sorry. Just do your research. If you watch him, he gets you really excited about something on Mad Money, then just do your research first. Write a full research report using my templates before thinking of investing, please. Yeah. But he can sell. And so he worked on the same floor I did at Goldman Sachs before I arrived there. Yeah. And he, apparently I talked to people at Goldman Sachs when I worked there. I spent 5 years there. I talked to them about him. So he left to start a hedge fund. People say that he was the most intelligent person that ever worked at Goldman, along with a guy named Robert Rubin, who's brilliant. He became Treasury Secretary back in the 90s. Yeah. But apparently, and I read this in Jim Cramer's book, I read a lot, called Confessions of a Wall Street Addict. The reason he got fired from Goldman Sachs, or one of the reasons, is this. So Goldman doesn't really advertise much, right? They didn't have their logo on the outside of their building when I used to work there either. But apparently, I think it was back in the 80s, the New York Times, a reporter, interviewed Jim Cramer. And the reporter asked Jim Cramer, how much money do you make? Right? And you never disclose that, of course. And the reporter kept asking over and over and over again, like a pit bull in a pork chop. And then Jim Cramer said, all right, put it this way. If I walked into a grocery store, I could buy anything I want. Then the reporter said, can I get a picture of you? And Kramer's like, yeah, sure. And the reporter said, put your feet up on the desk. And he's like, no, I shouldn't do that. The reporter said, put your feet up on the desk. And so he said, okay, fine. So he did that. Next day, New York Times article. Young Wall Street investor thinks he can buy anything he wants. And there's a picture of him with his feet up on the desk. John Whitehead, who's the CEO of Goldman Sachs at the time, wasn't happy about that. Yeah. And there's other reasons too. Yeah, and I know sell-side analysts that downgraded the street.com when it was public and met with Jim in his office, and he wasn't the nicest person. Yeah. Okay. Next question is, what jobs do you think children can work on that provides sufficient profits? Yeah. I would say import-export. And arbitrage. Let me explain what that means. So my kids who are really into finance, investing, etc., what I did with them was when they were younger, I wasn't that parent that was just going to buy them an iPhone. I don't want entitled brats. So I made them earn it. And here's what I did. We imported from Alibaba or AliExpress.com. Okay, we imported thousands of iPhone cases. Okay, and the cost, including shipping, when we sold these was about $5 each. And we sold them for $9.99. And what I did was up on the fridge in my house, I had 3 pieces of paper. Each piece of paper had the names of my 3 kids on it, Andrew, Matthew, Dylan. And each piece of paper had 200 squares. And every time they sold an iPhone case, they put an X in one of those squares. Okay, so $5 profit margin times 200 is $1,000. And we sold them over eBay. Okay. And then what would happen is the second that somebody bought, my kids would print out the shipping label, put the iPhone case in the envelope, walked up our driveway, and we have cameras everywhere in my house. Walked up my driveway, okay, and then put the flag up on our mailboxes as well. And that really helped them learn a lot about that. Now let me show you import-export here. You got to test this out though, because from an arbitrage perspective, what I'm about to show you, somebody is already doing, you're not going to make much money. So here's what you do. Here's what we did, and I taught my kids this as well. All right, so let's go to AliExpress.com. All right, and you got to make sure that nothing that you're going to sell is copyrighted. Okay, so let me write here iPhone case. And if you buy them in bulk, you can do quite well. Okay, so right here, you see this? Okay, so this, you can buy this here for 99 cents, okay, if you buy in bulk, okay? And then you sell them for, I don't know, sell them for $5 to $10 on Amazon. You can do really, really well. But you got to, or pardon me, on eBay. But you got to go to eBay to see if that product is being sold. If this has a fake Apple logo on it, I don't think it does. I think that's just the back of an iPhone. Then don't sell it, okay? And it's arbitrage. My kids did really well with this stuff. It was fun teaching about money that way as well. Another way I taught my kids about money was by having them play SimCity. And that's how I learned about bonds when I was a kid, when I played SimCity back in the 80s. Yeah. Okay. All right. And then my son Matthew last summer, he had a power hose, and he would wash people's garbage bins. And he made money that way. For me, I cut grass in the summer. Yeah. I learned a lot. I loved it too. I was outside, eh? All right. Next question is, do you like cars? If so, what's your favorite car? Yeah. I love Mercedes, but I'm such a nerd. I buy a car based on how cool the dashboard looks. Like I like big monitor stuff. Yeah. Yeah, so we got a Mercedes, a Tesla, and another car as well. Yeah. All right. Alexandra wrote, hey, bro. That's my kids. My kids always say, hey, bro. And then when Dylan was like 2 or 3, my wife got so upset. She was like, Dylan, I'm not your bro. Yeah. There's a good episode on that in Silicon Valley too, a bro app. Hey, bro, how much people like or of your level experience would you ask for 1 hour consultancy asking for fun? Yeah. Yeah. So for me, it's minimum humbly $1,000 an hour. So my day rate for companies is $25,000. I will not leave my office though. When I do corporate presentations, which is quite often, I do it right here. The reason I don't want to leave my office is because I can't get the time back if I leave. I'm not with these guys. Okay. Next up, Malcolm wrote, how do you feel about holding retail stocks? Yeah, like Starbucks, Lululemon, etc. Discount retail stores have always been a win-win for mart value in my eyes. But is this healthy for a growing portfolio? Thank you. As long as you stick within the parameters of no more than 20% of your portfolio can be in one particular sector and no more than 5% in any one particular stock. So every single stock in every sector has a different driver, meaning the one thing that you should focus on that makes the stock go up and down. So with retail stocks, it's same store sales. And the reason we look at that is I should not give a company or a stock a benefit for opening lots of stores because they could be taking on a lot of debt. All I give a damn about is the growth year over year of each store, and that's referred to as organic growth. So years ago, McDonald's growth slowed and investors were pissed off. So in order to increase year over year same store sales growth, what McDonald's did was they started offering coffee. Investors loved that because it's a high margin product, right? And then growth slowed. So what McDonald's started doing is they started having touch screens in their stores so that more traffic could come in and out and they don't have to rely on hiring as many people. Investors love that. Then a year later, growth slowed. And so what they started doing was, they gave you breakfast all day. What movie is this from? Can somebody give that kid a Happy Meal? And then they started opening 24 hours a day for this crowd. That sort of thing. Yeah. So just look at same store sales, and I'm sorry about my awful humor. Again, laugh at me, not with me, please. Okay. What's a book or paper you think everyone should read at least once? Yeah. I'll show you what I buy people a lot, okay? And I'm fully transparent, and I'm just going to tell you who I am and why I do what I do, okay? So I'm going to go to my orders here. This here is my favorite book right here, okay? And I bought it tons of times. It's called Jesus Calling. It's a Bible for kids. I read one chapter of this every morning on my iPhone before I get out of bed. And I also thank God for 10 things every morning before I get out of bed. That's the book I recommend. Now, if your question is business book, I would say How to Win Friends and Influence People by Dale Carnegie. It's an oldie but a goodie. Get the Audible book, listen to it in your car. Again, How to Win Friends and Influence People by Dale Carnegie. Another great book by Dale Carnegie is called How to Stop Worrying and Start Living. And Mr. Carnegie, who's brilliant, I love that man. He once said, it's not work that kills you, it's worry. Don't worry. Everything's going to be okay, guys. All right, next question is, if you could give your old self one piece of advice, what would it be? Sure. I was insecure when I was younger, right? And look, we all have self-sabotage moments, right? Like, we got to stop judging ourselves and stop giving a damn what people think of you. Because the reality is, they've got their own problems. They're not thinking of you at all. So here's the advice I would give. I showed this to you guys before, but I want to show it again, okay? And I'm going to point here. And for those that are coming to meet me in person this fall at my 3-day event, when you meet me, I'm a tiny man. You got to look hard for me, okay? So this is the most important chart you'll ever see. This is your age on the x-axis, for those of you listening on Spotify podcast. On the x-axis is your age. On the y-axis is give a damn. When you're down here, you're a little kid. You don't care what people think. Yeah, meltdowns in restaurants, who cares? Kids don't care. They say whatever they want. I remember when I started my hedge fund years ago, I brought my son, Andrew. This is Andrew here, all the way on the right, when he was younger, to meet my biggest investor. And I told Andrew, I want you to shake this man's hand and look him in the eyes and say, very nice to meet you. So this man is older, he's overweight. And my son, when he met him, because, you know, kids don't give a damn, he said, very nice to meet you. And I was like, yes. And he followed up with this. Very nice to meet you, you big fat old man. I wasn't happy that day. But God bless him. He's my son. Unconditional love. But you're down here. Okay, when you're older up here, you also don't give a damn. Old people don't have confidence problems. The problem is when you're in your 20s or teenagers, 20s, 30s, 40s, whatever it is, you're right here. You give a damn what people think. And this is a dangerous place to fucking live. Sorry for swearing, but I want you to remember this. I want you to get rid of this triangle of despair, and I want you to live at this level right here forever. That's the advice I would have given myself in hindsight. I want you to say, I don't care what people think. And I'm not saying be rude or disingenuous, but I'm saying focus on yourself, not on what other people think of you. And when you do that, what's going to happen is you're going to reach an incredible level of nirvana to the extent that you're going to be so happy every day. It's liberating. Michael Jordan once said, I failed over and over again in my life, and that's why I succeed. Michael Jordan, whose younger people is way, way better, by the way, than LeBron James. But imagine if you're Michael Jordan and you're playing basketball. 30,000 fans watching. Millions of people watching on television. If you're thinking about, are people judging me? What are people thinking of me? Do you really think he's going to be on his A game? No. And that's why Wall Street firms love to hire athletes. Condition yourselves to not give a damn what anybody thinks of you. So your homework, and I've done this before, but I care. Everybody get a piece of paper and a pen right now, please. I want you to write this down. I don't care what people think of X. Okay? Fill in the blank for X. I don't care what people think of the fact that I'm wearing a t-shirt for the best album ever, and I don't think anybody's told me what album this is. I don't care if people are going to judge me because I'm a 53-year-old man-child who loves video games. I don't care if people are going to judge me because my kids, we got the Switch 2, and there's a game called Donkey Kong Bonanza, which I got for them. They're not playing it, but I'm on the final level about to beat the alligator boss. I don't care. Live your life that way, and I promise you, you'll be happier for it. Yeah. Felt good just saying that. That was weekly webcast therapy. All right, next question I've got here is, using your founder's thesis, Chris, would you consider Google as founder-led as Sergey and Paige are board members? Thanks. No, you have to be CEO. You got to literally be running the company. Yeah. And then Peter wrote, I'll bite. Who's the Canadian sports team on your cap? Are you an investor or just a fan? So this team is way better than the New York Yankees. Okay. This is the Toronto Blue Jays baseball. And dude, I remember back in 92, 93, in Canada, we won the World Series. And I was in Canada, and I finally could tease my American buddies about something. And I said, you see, the great American pastime, the World Series, which is what Americans call a championship where two countries are in. The World Series, we won it in Canada, not you Americans. And my American buddies, who are pretty witty, said, yeah, so what, Haroun? Your Americans beat our Americans. I was like, touche. Yeah. Okay. And I'm not an investor in it, but I don't know if you got, for Blue Jay fans out there, you remember Jose Bautista in 2015 hit that incredible shot, that home run, right? So I bid on that baseball in an auction. My max price was $10,000. When I lost the auction, I was like, kind of like, good. But now I'm sad because that would be worth a lot. Yeah. Okay. All right. Next question is, if aliens challenge humanity to a cook-off to decide if we get to stay on Earth, which dish should we send? Oh, God. Okay, look, the best food on the planet that nobody ever talks about is the dosa, okay? Now, when we go to Indian restaurants, it's great, you know, chicken tandoori, all that great stuff, but please, 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 always ask for dosa. It's like a Krispy Kreme donut out of the oven. It tastes that good. It's the best food you'll ever eat. And I first tried it when I was in Mumbai, teaching in Mumbai as well as in New Delhi. I ate at Punjabi Grill for my students here in India, which I loved. And I know you're going to laugh because that's airport food. Yeah. Next up, Conrad. Hey, Conrad wrote, I live in Canada, my people. What are your thoughts on the economic outlook with tariffs, GDP, etc.? Love your content and shorts. Thank you so much. Appreciate that. God bless you. Yeah. Yeah. Things are not good, man. Things are not good. And I just got back from Canada. I was there for 10 days. Got back on Monday of this week. I was in Toronto. There is a lot of fear right now and a lot of uncertainty. My buddies that run their companies are not hiring anybody. They're trying to outsource as fast as they can to AI. They're prepared for the perfect storm, you know, with Trump tariffs, etc. You've got an incompetent government there as well. Thank God Trudeau's no longer our prime minister. Carney's is better. I actually overlap with him at Goldman. He's a good guy. He's a smart guy. But look, they let in too many immigrants. And immigration's a great thing. Look, I'm a product of immigrants. My dad immigrated from Egypt. I immigrated from Canada, United States. But the problem with Canada, which you don't see in the United States actually, is it's kind of like Europe. But more extreme. They let in too many immigrants, okay, to the extent that it drove up the prices of housing materially. So the price per house in Canada is way, way higher relative to what the average Canadian makes compared to the United States. It's a big, big problem. And a lot of Canadians won't even go down to Niagara Falls anymore because the government is put up a lot of immigrants into hotels. They're paying for it all as well, right? And it's, I don't want to stereotype immigrants as creating crime. But if you don't have a job, you're more likely to commit crime. And so crime is on the rise materially in Canada. I really wish a conservative government won the last election. Pierre Poilievre is great. Maybe comes across a little bit too arrogant to the average Canadian, which might have been the reason he didn't win. Same thing with Gavin Newsom. He comes across a little bit arrogant to middle America, which is why he probably won't be president. Yeah. So anyway, those are my thoughts on the Canadian economy. Yeah, I'm worried, very worried. Yeah. Yeah. If there's a housing crash, I'll be buying a lot of houses in Canada. I own a bunch there already. Okay. Anything wrote, if we discovered we're all living in a simulation, would you still pay taxes? I love these questions. Somebody said to me something really interesting the other day. They said, have you ever dreamed, I'll ask all of you this, have you ever dreamed and in your dream you're using your iPhone or your Google handset? No, because we're living in a simulation. Just kidding. Would I still pay taxes? Yeah, I would. Yeah. I'm pretty much by the book. I don't lie, I don't steal, don't cheat, all that stuff. Yeah. Manalas from Calcutta, how are you? Speaking of India, who wrote, good morning, my dear mentor. Chris, please. So very back, looks like Punk from Back to the Future. Let's go. Thank you. Thank you. That's probably the best movie that's ever made as well. And I almost wore my Back to the that's the inside joke between me and him. I almost wore my Back to the Future shirt today. Great movie. That's the only movie my kids can watch for me from the 1980s and not get bored. That and Ferris Bueller's Day Off. Oldies but goodies. Alexander wrote, are there people like you who do YouTube Live? Any of your friends who you recommend to talk? Yeah. I don't watch anybody else. I don't really know anybody that does a weekly YouTube Live talk about this stuff. There are people, much more successful than I'll ever be, like Dave Ramsey, and that do that sort of thing. Yeah. Okay. Next up, Shock Rollo wrote, hi, Chris. Hope you're doing well. Likewise. What do you think about cryptos and its future? Yeah, I'm bullish on a handful of cryptos. I still think 95% of all cryptos are an absolute scam. But there are some that I love. I set up my Bitcoin IRA years ago in like 2013, or we have it in some kind of a tax fund. I'm never selling it. I do think that Bitcoin at some point in my life, I don't know when, I don't really care when, but at some point in my life, Bitcoin will be $1 million per coin. It's going to go there one day. I don't know the path, nor do I care, but I know the destination in the long run. You've got administration that is very crypto friendly. The president has his own crypto, or lots of NFTs as well. So I'm very bullish. What would make me more bullish, though, is if the SEC regulated cryptocurrencies to the extent that before cryptos were allowed to be on exchanges or exist, you have to have investment bankers write an S1 document. Yeah. But what made me even more bullish on cryptocurrencies is once they were available in ETFs, and once the SEC blessed it and said, yes, you're allowed to do crypto ETFs. Because now it's easier for all of us retail investors to buy cryptos. Before then, I can't even find, oh, here it is. So in the past, and a lot of people still do this, they would use Ledger Nano or, cold storage wallets in order to buy cryptocurrencies. But you know what, dude? Setting up these freaking things are so complicated. To the extent they're so complicated, you get nervous. And as a result, you cut your Bitcoin order in half before you buy or whatever crypto it is. Now that you can use ETFs, it's so much easier. It's kind of like back in 2004 when ticker GLD, the gold ETF, was created. It's easier for us to buy. Easier. And that made me really bullish too. Yeah. And institutional ownership of cryptos is now higher than retail investors. Yeah, pretty exciting. Yeah. Do your research first. No more than 5% of your portfolio can be in cryptos. Yeah. All right. But if you guys live in a very left-leaning country, be careful, because I think your government is going to make cryptocurrencies against the law. And the reason is cryptocurrencies is or can be the biggest threat to national security. Why? Because the biggest power a government has is the ability to change interest rates. How do they do that? Well, what they do is, let's just say I'm the government, okay? I'm the government and you're all banks or consumers. I'm the Federal Reserve or the bank of whatever. I sell you bonds, okay? You guys buy bonds, okay? So I give this to you. You give me your money. I take your money and I take your money and I put it out of circulation. This is fake money. When there's less money out there, that means the price of money goes up, meaning interest rates, and vice versa. Now, let's say, again, this is fake money. It's like I'm a fake teacher. Let's say that you don't want to buy my US dollars anymore from me. Instead, you buy cryptos. Well, now I can't sell you bonds, right? And when I sell you bonds, sometimes I use the money that you gave me to, build weapons, bridges, walls, whatever it is. My economy crashes because you don't want to buy US dollars. You only want to buy cryptos. So a lot of left-wing leaning countries will make cryptos against the law. Yeah. So anyway, I hope that makes sense. All right, just give me 1 second. Next question is, you're given the power to add one new letter to the alphabet. What does it make? What's his name? Yeah, well, one of my employees is named Lloyd, and Lloyd has 2 L's. And the reason, because it's a Welsh name. And in Welsh, which is kind of like English but different, there's an extra letter that's, and that's why Lloyd is Lloyd. Yeah, I guess, I don't know. Okay. Alexandra wrote, hey bro, I had an assumption that some jobs in finance pay so well that you have a very sexy life, which kind of profile offers Wolf of Wall Street type life, like FU money. Yeah, yeah, yeah. So I would say hedge fund, investment banking, private equity, venture capital, private wealth management, in that order. Yeah. A lot of stress, though. A lot of stress. Yeah. Yeah. All right. Minas wrote, how did you feel in your 20s when you were where I am now? You started at Accenture and then moved to New York City. What were you chasing home, money or purpose, or what? Please elaborate. Thanks. Yeah. So I worked at Accenture. I spent 4 years there back in the 90s when I was a kid, when I was younger. I loved it. And then when you start moving into kind of management, I got bored. I wasn't learning as much. I wanted to code and stuff. So I went to Wall Street because you're always learning. Yeah. And I watched this movie growing up as well. And I knew every line from the movie Wall Street. That's not a good thing. I don't know. I just kind of wanted to try it out. And I went there and I don't know. It was kind of fun. Yeah. You're always learning. Okay. But every time you guys see a job opening for a financial services company, the probability you're going to get that job is 1 in 250. So don't just apply. You got to network aggressively, know people in the company. And that's what I do for my clients. So if you guys want to work in the finance industry or any industry, just set up a Zoom meeting with me. Just go to my website, harounmba.com, and book a call with us. Yeah. Okay. All right. Next up, Alexandra wrote, have you ever met some group of college bros who made a fortune by investing and trading together like small brownfield fund in The Big Short? Yeah, I have. Just usually hedge fund based. Yeah. Actually, almost always hedge fund based. Or maybe somebody got lucky and was an early employee. Remember, one of the first 100 employees at Google before it went public in 2004. Yeah. Yeah. All right. How should you make money in a down market when everything is falling apart except from buying low? Can we have puts to hedge? How would you do it? Thanks. Yeah. Yeah. So earlier in today's call, I explained how to buy puts on Coca-Cola. You can rewind to watch that if you want. In terms of asset allocation, when there's fear, I usually buy gold and have that as my biggest position. If you wanted to preserve capital as well, you could buy higher dividend yielding stocks and AAA rated bonds. Okay, but be careful with whenever you guys see a dividend that's really, really high for a stock, like 20 or 30%, don't buy it without doing your research, because quite often the market is pricing in the fact that is not sustainable, or it's a mistake in reporting in the quoting service you looked at. Always read the investment offering memorandum or the 10K if it's a publicly traded equity company to find out what the real dividend is. Yeah. All right. Software engineers who are young enough are looking for jobs in Chipotle, per the New York Times. Do you think days of easy money in engineering is over? Yeah, I'm not a fan of the New York Times. Yeah, I do. I do. I don't think anybody should study engineering, because again, Jensen Huang, the CEO founder of Nvidia, said that AI is perfect for replacing developers. Yeah. Yeah. All right. What is more important to you in a day of AI? Selling skills or technical skills? Selling skills all day long. Look, the best entrepreneurs, CEOs, political leaders, rich people, whatever, they have one thing in common: they can sell. If you can sell, you can do anything. Yeah. Yeah. And I remember back in the 1990s growing up in Canada, I love Ronald Reagan, but I remember the cover of, and I do have to get going soon, guys, sorry. But I remember the cover of Time, Newsweek, etc., was the downfall of the American student. The American student is 50th in the world in math, sciences, etc. It's game over. It's not. Because American students, regardless of where they're born, and half my students in the United States were born overseas, but American students are number one in the most important economic category that nobody talks about, which is confidence. With confidence, you can sell. With confidence, you can be like Mark Benioff and make cloud computing, which is so boring, sound amazing. Confidence is key, and it's the job of every single parent, boss, and teacher to boost the confidence of their employees, kids, mentees, whatever it is. Yeah. And if you're confident, you will get the job. If you're confident, you will get the sale. Because confidence leads to perceived competence. Yeah. Okay. All right. All right, give me 1 second, guys. I'm going to show you guys behind the scenes here. I use something called Wirecast. Okay, I'm going to hide this here, the bottom part, and I'm going to go to my website. Okay, so I want you guys to go to harounmba.com with me, okay? And what I want you to do is down here, I want you to click book a meeting, okay? And I want you to talk to me and somebody on my team. And the reason I want you to do this is I want to help you change careers, or I want to help you start a company, or I want to help you with investing, whatever it is, okay? And we teach everything, everything. So again, go to harounmba.com, and at the bottom, I want you to click on book a meeting, okay? Cool. And the way that my program works is as follows, okay? You get 10 hours of one-on-ones with me. And those 10 hours can be done Mondays through Saturdays. Sunday, I don't work because it's time to spend with Christine and my sons and church. But you get 10 hours of one-on-one coaching, confidential coaching with me. Okay, whatever it is you want help with. You know, getting a new job, promotion, investing, starting a company, growing your company, whatever it is, I'm here to help you. In addition to the 10 hours, you get at least 1 hour every single weekday for a year in very small group Zoom Q&A. 7 hours per week, actually, in daily group Zoom Q&A. That's 300 hours per year. So you get 10 hours of one-on-ones with me. You get 300 hours of small group Zoom Q&A. And you get access to a massive network of like-minded people that's, you know, your network is your network. They'll help you out as well. My clients are great. I love them. You also get 500 hours of my award-winning online courses for life. For life. And you get all new courses of mine for free forever. So if you're interested, again, I want you to go to harounmba.com and set up a call with us. Yeah, and yeah, book a meeting right here. And then when you book the meeting, if one of my employees is on the line, just tell them, hey, bring Chris onto this. I'll come on as well, okay? So anyway, check it out. We've got a 100% money back guarantee. It's life-changing. I will help you, I promise. Yeah. All right. Okay. Next question is, do you have any favorite business or investment games? I like the look of Game Dev Tycoon. People who pirated it would have their games business ruined by software piracy. Yeah, for me, it's bizarre. My youngest son, Dylan, who's 16, he's really into investing and day trading. I'm trying my best to convince him it won't work. I think he's going to learn the hard way. But the reason he got into stocks was because in GTA 6, you can go to some cafe and there's stocks you can buy. I don't know how to get to that, but anyway, yeah, that in SimCity. My son Andrew, who's at Berkeley, he got into engineering there. The reason he did it was because when he was younger, he played SimCity with me, and he was like, I kind of want to build stuff. Yeah, yeah. And then he got out of he switched from engineering to economics because it was hard to meet girls. I didn't say that. Okay. Side note, though, Elon Musk lived in Canada for years. Okay, and he got into Waterloo, but he didn't go to University of Waterloo, which is engineering based. He went to Queen's for the same reason. Yeah. Are people in the United States or Canada crazy for government jobs as they are in India? No. I think it's the opposite. If you work in the United States, and you work for the government, you're kind of worried right now because of Doge. Yeah, cuts. Yeah, yeah. Plus, you're not going to make as much money working for the government, and politics will drive you cray cray. Yeah. If you think corporate politics are bad in your company, try working for the government. Screw that, man. Okay. China issued an advisory to its companies to not use H200 from Nvidia. Do you think Nvidia and AMD are dependent on China, where China is just 17% of the market of Nvidia and the USA is 40%, 7%? Your thoughts? I mean, a lot of tech companies are obviously not dependent completely on China, but they got material exposure there. And this is evidenced by the fact that Elon Musk never says anything negative about China. Like, Elon Musk is very right wing. Like, don't you think he should say something about communism not being good? But you know why he doesn't. He doesn't because, it's a big market for him, and BYD is taking share as well. Read between the lines when it comes to what's not being said. Yeah. Yeah. All right, next question is, do you think Japan is stuck? I was watching a documentary that Japan will have, yeah. So it breaks my heart, but Japan has like 130 million people right now, and in a couple decades, it's going to have 80 million. Just people are not having kids, obviously. It's in decline. It really breaks my heart. Really breaks my heart. Yeah. And actually, a soft spot for me for Japan, because the first IPO I ever worked on when I was a kid at Goldman was NTT Docomo in 1998. I think it was October 1998. It was an $18.3 billion IPO. This is the prospectus. People at Goldman are very small. Sorry. Bad humor. Yeah. But I do love Japan. I'm going there actually with my wife and my kids this Christmas. Yeah. Okay. All right, next up, Akram wrote, and by the way, for those of you in my premium products, I'll see you guys at 10 a.m. in 13 minutes for our weekly 3-hour and 20-minute Q&A, Zoom Q&A. Okay, and you can show me your LinkedIn profile, I'll help you with that. Show me financial models, I'll help you interview, help you with your company, yada, yada, all that stuff. Yeah. Okay. So Akram wrote, where can I find your templates to value companies? Yeah, you need to join my program. So go to harounmba.com, Haroun, pronounce heroin, sorry, harounmba.com. And then at the bottom, book a meeting with us, please. Yeah. Or, yeah. Okay. All right, next up, Matej, never seen you on the call before. Pleasure meeting you. Hope you join us again. Wrote, hey, Chris. I saw the complete financial analyst training investing course on Udemy is currently on sale. I'm considering buying it. Is this the course really created by you? Yes. Yeah. So I did that in the summer 2016, I think. Yeah. That was me. If it's udemy.com, Udemy is one of my indirect distribution channels. They're an important partner of mine as well. Yeah. And you'll notice I never say anything about that stock because it'd be unethical for me to do so. Yeah. I never say anything on this webcast about the stock. Yeah. But if you want to work in finance, you can join my finance boot camp as well. And I'll show you another link for that as well. Okay. So I help you get a job in finance. I've had my customers have gotten jobs at Goldman Sachs, investment banking, venture capital, private equity, etc. I don't care what your background is, I can help you. So you just go to learn.harounventures.com and then click the product you're most interested in. So click Business Academy, Finance Bootcamp, or our new product here, the AI Bootcamp as well. Okay, you want to get a job in finance, take this one here in the middle. You want to, take your AI game to the next level, whether you have your own company or whatever, take this, and then to learn everything about business, my MBA program, etc., just click here. Yeah. All right. And I'm not going to be able to get through all questions. So for those of you in my premium products, I'll see you guys in 10 minutes on that Zoom call. And if you're a student, you don't know how to access the Zoom call, just email support@harounventures.com, please. All right. Minas wrote, will the AI bubble last forever and ever? No, all bubbles burst. We just don't know when. And I remember back in 2007, I worked at a hedge fund called Pequot, and the billionaire founder, Art Sandberg, breaks my heart. He passed away from pancreatic cancer a year or two ago. But I remember Art, great guy. I remember we were, myself, my colleagues, we were pitching housing-related shorts to him. You know, home builders like Lennar, ticker LEN, and KBH. And our thesis was, well, it's a real estate bubble. And I think this was in early 07, and he stopped us. And he said this. It was really wise. He said, son, really nicely, son, I'm going to stop you right there. I've been around long enough to understand never to stand in the way of insanity. Markets peaks, markets trough, bubbles burst. You can't time it, though. So are we in an AI bubble? Yes. Do I know when the peak is? No. It's kind of like the internet bubble. You know, internet stocks were going crazy from around 95 to, March of 2000. Everybody knew it was a bubble. Just, I don't know when it's going to burst. Just be a long-term investor and you don't have to worry about that stuff. Yeah. Okay. All right. Stoic wrote, I'm a network engineer and I have a career in tech and literally told my kids, do not study anything computer related. Focus on medical or lawyer. Yes. Yeah. And a lot of parents, it's interesting. You know, they pressure their kids to be doctor, lawyer, engineer. Well, I think in the future, they're going to pressure their kids to be doctor or teacher. And the reason I say that is if you're a doctor or, God forbid, a lawyer, you can only have one customer at a time, right? But if you're a teacher like me, you can literally have 1 billion customers, literally, in every single country and make money while you sleep. And so I have over 2 million paying customers humbly in every single country. And I remember telling my dad when I first started doing this, I was like, Dad, you're not going to believe this. Last night when I was sleeping, I made $40. And my dad was like, well, Chris, why did you wake up? That's where I get my dad humor from. Yeah. But I think everybody has something to teach. And when one teaches, two learn. Okay. I see there's tons and tons more questions. The one thing I want to look at is to see what you guys said. Should I wear a t-shirt or should I wear a button down? All right, button down. Yeah, I think t-shirt wins. Okay. I guess I have to wear a t-shirt every week now. Okay. All right, guys, I see there's tons more questions. If you're in one of my premium programs, you can access, you can ask me more questions starting at 10 a.m. today in 7 minutes. For everybody else, God bless you. And I'll see you next week and every single week. Thank you. Please like and subscribe and all that stuff my marketing person tells me to tell you. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.